Hello, everyone. I just want to say I'm very happy. Really, it's an honor and a privilege to have Darvel Desroches here. We're going to spend some time to get to know him. Also, we're going to spend some time with a little interview. So I've got some questions that the students put together, really great questions. So without further ado, I'd like to introduce Darvel Desroches.
Well, good evening, class. Thank you very much, Infan, for the introduction. Infan has told me so many good things about you all in this class. He tells me that you guys are very interested in finance. You guys are hardworking, and you really pay attention to the materials, and you ask some good questions, which based on some of the questions that Infan has verbally told me, that's a good thing. They're really good questions. So you guys are putting in the work and the time to really understand finance. Finance really applies to all businesses, whatever it is, whether you are a tech company, you Facebook, LinkedIn, whether you're a construction company, whether you're an apparel company, it applies everywhere. Every business owner and business executive must have adequate um, uh, confidence and adequate knowledge of finance to run their business effectively. So let me kind of start off with just giving you guys a little bit of background on myself in terms of how I sort of am in the position I am right now. Is I am a practicing attorney. I started off my career at Bank of America, used to be LaSalle Bank. I was attorney and officer, started off as staff attorney, lowest attorney in the department, and youngest at the time as well. Grew right out of law school, which is almost unheard of. Started off, did not have a banking or financial background. My major in college I was double major in English and political science and a minor in history. So numbers was not my, uh, at the time I thought my strong suit. And so it's interesting that I felt that my first job out of law school, I taught school for a year and a half before going to law school. But it's interesting that my first job out of law school was in the banking and financial services industry. And so when I got to Bank of America, I was almost like a fish out of water. But once they throw you in there, you really learn, and you learn by doing. So I was able to grasp a lot of the financial terms, the banking terms, basis points, and so on and so forth, so that I could adequately and competently represent the internal clients that I had. So I spent about 4 years at the bank, was promoted, and eventually I wanted some more deal work as became intrigued by um, finance and the banking in general. And I took a job with a company called National Equity Fund, in which I was the associate general counsel handling and administering this real estate development program called New Markets Tax Credits Financing, so which was part of what's called structured finance. And I spent some good time with National Equity Fund. I got my hands even more dirty in finance and learned some what's called high finance as the attorney. So I was supporting some of the business folks, but I learned way more about finance and real estate economics than what I ever dreamt that I would learn. So thereafter, I went into private practice with a law firm called McGaw Law Group. In that capacity, I served as of counsel for them. We represented small, mid-sized companies in mergers, acquisitions, real estate development, and finance, and so on and so forth. And now I currently serve as a co-managing partner of Ikenga Development Group, which is a real estate investment, asset management, and development company based in Chicago, which specializes in revitalizing communities through responsible and sustainable development. In that capacity, I, along with my co-managing partner um, and another partner, we oversee projects, and we originate projects that meet our core mission of really enhancing and enhancing community through affordable housing, and adding really a um, value to the community by bringing these sort of aesthetically pleasing housing to the local communities where they had previously not existed. So, with that said, I'm very happy to be here, and I thank Mfon for the invitation. And I know that you all have some questions. And with that said, I'm going to turn it over to Mfon, and we can get started.
Well, great. So we're really happy to have you here. So we've got a few questions, really great questions from the students. We're going to jump right into that. The first question that we have is, how do you know what the community needs are, and then what process you follow to know what will enhance the community and the tenants' everyday life?
Well, we're all, my partners and I and our acquisition staff, we are all very familiar with the communities in which we do business. For example, right now our focus is really on underserved areas within the city of Chicago, as well as the Colic surrounding near suburbs. I myself am a resident of Hyde Park. I'm familiar with the other underserved communities such as Woodlawn, South Shore. And so we have a personal knowledge from which that, in terms of our understanding what the community needs are. And second, we of course do our research. We connect with the local and state politicians. We ascertain their thoughts in terms of what are their needs, what they like to see, and our everyday interactions with our tenants, and I would call them stakeholders, gives us a good understanding of what they need. The number one need right now for our tenants and just the community in general is affordable, decent housing, such that these folks can raise their kids, come home in a decent place in which they can lay their heads and not feel as if they are, rejected, or as if they are, quote unquote, living in an undesirable area. Our experience is that once our tenants feel as if they are welcome and they are taken care of, the property is taken care of, then they respect the property, which of course enhances our bottom line.
Okay.
So in terms of us understanding what the needs of the communities are, I think, and to kind of recap, it comes from our personal experience of living in those communities, growing up in those communities, and also the market research and the relationships that we have with leaders of those communities, and also our past experience with our own tenants who reside in those communities. So I think we have attacked this and analyzed this from different perspectives, which gives us a good understanding of what the community needs.
Okay, that's great. That's great. Now, how do you choose your projects, and what type of financial ratios do you consider when choosing your clients, and why?
Well, we choose. This is kind of an interconnected question because our company is, in terms of selecting clients, we are the client. So we have national financing companies and high net worth individuals who are our investment partners, but the deals are ours. So we broker, we acquire, we manage our own assets. So in actuality, we are the client. The way we select projects, real estate finance and development is it could be complicated, but once you break it down, it's really not. At our core, we are a for-profit entity. We're not a community development entity. So the bottom line has to be met, and there has to be a profit. There has to be a profit motive for every project that we select. So the numbers have to make sense. Because at the end of the day, we are stewards of our investors' money. And so we have to turn a profit. These investors, of course, have invested in our company because they believe in our core mission of developing and sustaining these underserved communities. But at the end of the day, they do require some sort of return on their investment. So the way we select the projects is we look for areas, we look for assets that may be undervalued, or not maybe, that are undervalued, and that could, with our expertise, as brokers, as developers, or as contractors, that we could essentially bring the value up. We could really heighten. Think about this a little bit. We could really, bring these properties to life in a positive way for the communities, as well as make get our returns for our investors. So one of the things we look at is really, distressed properties that may be in foreclosure or may be in receivership. Some of these properties need extensive work, but they already have tenants in them as well. So it may be what's called low occupied. In real estate, anything south of 80% occupied, actually more like 88% occupied, is considered an under occupied building. And some owners may let the building go to waste if they don't have sufficient capital to maintain it. So we look for those type of assets and those type of projects that we can come in with our expertise in construction, asset management, property management, and more importantly, our understanding of the underlying community dynamics to see whether these are viable projects. So those are the type of projects we look at. It's really on a case by case basis, but at our core, the projects have to have a positive impact on the community that we serve.
Okay, that's great. That's great. I've got another great question. What is your greatest failure, and what did you learn from it? That's a good one.
That's a very good question. My greatest failure thus far, and there have been many, but I will say it's something that's not related to this company, but it's related to my business experience in the past, business and legal experience. At one time, I was representing a company, and I was internal at the same time, and there was a problem we had, a legal matter that we had, and we analyzed the legal matter. We thought that we were in the right, and we were in the right, but sometimes being right is not necessarily, it doesn't necessarily result in the best result for your company. So we made some decisions because we were right, because we thought we were right, and we were fastidious in that, in which I wish I could have taken back, because that would have prevented some negative publicity that the company received, based on a bad lawsuit, which we thought was a frivolous lawsuit. But nonetheless, sometimes a lawsuit for a young company could really be a death knell. And so I wish, in hindsight, that we had, even though we knew we were right, we were in the correct position. I wish we maybe had considered settling the matter before it had sort of arisen to a lawsuit. So I hope that adequately answers that question.
That was great. That was great. Let's take one more question. Now, Ikenga is a limited liability company, and because it's an LLC, you have flexibility to choose the type of structure.
Mm-hmm.
Now, what type of structure does your company have, and why? So is it sole proprietorship, partnership, corporation, or S corporation?
Well, Ikenga is a limited liability company. It's essentially structured as a S corp. So that's our tax designation. So the company is not taxed in its individual capacity. So the partners are taxed on the profits. individual. We selected that because we are small. There are only 3 of us. We do have staff, and so we do pay ourselves a salary. But at the end of the day, is we selected the LLC format because we are in essence a partnership with limited liability. That's precisely what a LLC is, and it's more tax advantageous for us, as well as it's more flexible.
Okay. Well, that is great. Do you have any other comments or anything you'd like to share?
Well, I would say it's good that you guys have taken this class. So some of you required to do so based on your majors or based on the areas of concentration. But I feel as if had I been in your shoes, I don't know, 20, 15 years ago, and I was still well, actually more than that. But if I were in your shoes, if I had been in your shoes, I definitely would have taken a finance class such as this from a professor such as Mr. Upon. I've had to learn all of this on the job. And so I had, like I said, I did not have any financial background, economics, and so on and so forth. So I had to learn this on the job, and it took me some time to even talk about finance and talk about business in the way I'm doing. So you guys are well ahead of the curve. I'm sure that after this, you guys are going to bigger and better things, and I wish you all the best. So just study hard, continue doing what you're doing, and things will be okay.
All right. Well, thank you so much. It's been really an honor and privilege to have you here with us and to share this with the class. I know they really appreciate that. I appreciate that. So thank you very much. All the best.
Thank you.